Good morning, my friends, my viewers, my listeners, and to all my subscribers out there. I want to appreciate every good thing you're doing, and I want to bring you a short video about this market volatility 101x. In fact, the whole of the VIX you're seeing. Um, but before I proceed, if you are new to this channel, this is your first time of watching this video, and you want to make wealth, you want to make money trading, um, the synthetic indices, boom and crash volatility, just subscribe to this channel, hit the subscribe button and turn on the notification bell on your device so that whenever I drop a new video, whenever I drop a new content, you'll be the first, to be notified. Now I try to draw your attention to a video that I made previously about these moving averages, and this is it. And the moving averages I have on my chart, they are at it again. The moving averages I have on my chart, if you look at it very well, it is at it again. And I want to give you a clearer notification on this. Now this, I have this moving average, as you can see. I have this one, I have this, and I have this is my slow moving average. This guy here, this last one here is very slow. Slow is on my it has a period 100 period moving average, and this is my 50 period moving average. And I have this one, 35 period moving average, and this one my 26 period moving average, and this one. They are fast moving averages. They work with the price, they go along with the price. This is 7 and 2, but though I added shift to one or two of them so that I can get accuracy, I added shift to one or two of the moving averages. If I go to the settings here, you see, okay, this one is not carrying shift. Look at this one, the one with 7 period is having shift 1 exponential, and I apply to close. The style is 4 pixel. Then look at this one, the 26 period, it has shift 1 and it's also exponential, and I apply to close. The style is 4 pixel, a color of my choice. And if you look at my 50 moving average, okay, 35 is same. The 35 period is also having shift 1. This gives me accuracy, and my 50 is also carrying shift 1. I added shift 1 to to the moving average. Then the method is also exponential, but applied to typical price HLC/3. Then I click done. The style is 4 pixel and a color of my choice. Then look at the 100. My 100 period moving average is also carrying shift 1 exponential, but they apply to weighted close. Somebody called yesterday and was like, this I need the settings of the moving average. If you are there, this is, I have not changed my moving averages. I have been using this same moving averages for some time now, and it has been giving me positive results. I don't even go to my indicator window 2 to check anything there, though I have my indicator window 1 rather, where I have the relative strength index and the average true range. I don't go there. I work with the main chart. The main chart gives me what I want. All the result I'm looking for is in my main chart. I don't need to go to another indicator window looking for actions or looking for things here and there. The main action is in the main chart. Now let me do a run through again. This is the first moving average. If you've not gotten it, this is the settings. The first one is 2 period, shift 0 exponential, apply to close. The style is 4 pixel, any color of your choice, but I prefer red there because it's moving with the price. And the second moving average I have here is it has period of 7. I added shift 1 exponential. A method is exponential, apply to close. Now the style is 4 pixel and no levels, you understand. I click done. Then the third moving average I have here is, it has a period of 26 period moving average, shift 1 exponential. The method is exponential, apply to close. The style is 4 pixel, and color of my choice, you understand. And I have this one here. The period is 35. This one has a period of 35. It's also exponential, apply to close, and the style is 4 pixel. And I have this one, it is 50. The period is 50. The shift is 1, exponential. The method is exponential. This one is applied to typical price. This one is the bomb. Once it gets to price, just expect bullish reaction. Whenever this guy gets to the price, expect reaction. There's always a reaction whenever the guy, once it cuts through the price, you must see a reaction. It can act as a support. It supports the trend so badly. Whenever price comes here, it must act as a support. It supports the price and you see a reaction. Same goes to this guy. My 100 period moving average. This guy is also very crazy. He's radical, and the shift is 1. The method is exponential. You apply to weighted close, HLCC/4, and the style is 4 pixel, and I click done. Now this is what I want to point to you. Whenever price gets to this 35, whenever price gets to my 26 moving average in this form here, look at what happened on this. Immediately price got here, look at what happened. It reacted until it got to this level. It is this same thing you see now. It is same thing that happened in boom and crash. This same thing happens in boom and crash. Let me take it back to, let me show you something there. Okay. Oh, this one is not gotten. No. Okay. Okay. See what happened here. Look at what happened. Look at what happened when price got to my 100 moving average. You see the reaction. The reaction was like this. Then even after getting up there, look at this is my 50. This is my 50, 35, and 26. The market was trying to do, when price got here, look at when price got here, the pushback, even as it is now, there's still going to be more pushback. I tell you, there's still going to be more pushback because the price is on the trend line. Just observe it. You see more reaction. There'll be more reactions here because the price, the 50 moving average, the 35, the 26, they are all under the price, and there will be multiple reactions. Multiple reactions will come up any minute from now on boom 500. Let's see what happens on what's happening in boom 1000. Okay, this is a 30 minutes time frame. Let me go back a bit. You see what is happening here now. For this to take this trade successfully, this is what you do. You just draw a trend line on this and another trend line here. This is how to trade a market of this form. Whenever the price gets to this trend line, there will be reactions. But let me go back to a lower time frame. It is the same thing here. So if you look at it, it is the same. This 35 moving average is acting as a resistance, that whenever the price gets to, okay, let me bring it clearer to you. Whenever price gets to the 35 moving average, it rejects it downward. Look at it, the same thing here. If you proceed further, it's the same thing here. So the moving averages here, 35 and 50, they are acting as a resistance to the trend. It is what happened. It is the same thing with the same experience here. The same experience here. Let's see. The same experience here. Look at it here. It reacted and took the price back and came up and it came down again. The same thing happened here. Multiple reactions. Look at it. As it goes up, it will come down. Even with this baby spike, the trend will still come down to this level, and when there's a reversal, it will not go beyond this level. You understand? That is what the moving average does on this trend. It supports it acts as a support and also as a resistance. But going back to the step index that I'm trying to point out to you now, when you go to the higher time frame, look at what the moving average is doing. The price got to this level and got rejected on the 30 minutes time frame. Now let's go back to the 15 minutes time frame. Look at what happened here. Look at it here. When it got to this 26 moving average, price got rejected multiple times. Now it came down to this 35 moving average, and look at the rejection. Now it's going to come down to the 50 moving average, and there will be another rejection. Until it gets to this guy, there will be multiple rejection upward. I don't know if you get what I'm trying to say. So this is what these moving averages can do. They give you warning. Whenever the price touches the moving average, you get rejection, like a buying signal. It gives you a signal that, so whenever you are trading and you notice, if you have this moving average in your charts and you are trading and you notice price coming close to the moving average somewhere around this region, it is either if you are selling, if you are in a selling trend and you notice the price is coming close to, you can either back out and take another position, like take a buying position. You can back out and take a buying position so that you don't get hit by a spike, because most times this moving average, or they always meet at a support and resistance level. If I am to draw my support and resistance line using this shape, it is something like this. So there will be a reaction within this region, within the region, like just the way we got this reaction here. See this reaction, there will be a reaction within this region, and the reaction will remain here for some time before it progresses, because if you look at it, the 35 moving average, if we have to extend it, it will come the same way. So there will be multiple reaction, and this one will come here, another reaction. So this is a picture I want you to understand. Now let's go to a higher time frame and see what is happening. Okay, look at this. Okay, this is another thing you have to put into consideration. This is the 100 period moving average. Whenever the 100 period moving average cuts through the price in this format, once it cuts through the price in this format, you see reactions, multiple reactions. Sorry, excuse me. And that is what we are getting. So within this frame, there will be multiple reactions in the 30 minutes, 15 minutes, 5 minutes is like this. Look at the 5 minutes. The 5 minutes time frame, the 100 period moving average is under the price, and that is why we are getting this reaction, is pulling upward. And if you go furthermore to the 30 minutes, like you've seen before, it is the same thing we are getting here. See that upward movement you saw in the 5 minutes time frame is what we are getting here. Okay, so trading VIX is easy. It's easy. It's so simple. It's not like boom and crash where you have multiple spike hitting or spike and all that, But if only you know how to, do this business, if you know how to set your indicators, set your parameters, so that whenever you are trading, you are not scared. This market is going to go in this direction, looking at it from a higher time frame. Before you even start any market, any business or whatever, enter into any trade, try and view it from a higher time frame if possible. If you're not getting a clear picture, you can move to a higher time frame from the previous day. Okay, this is the weekly time frame, and the weekly time frame is giving us a bullish movement, a bullish signal that the trend is still going to go furthermore. It's still going to go up with what is showing here. It's going to be bullish for some time, before the trend will do a pullback again. It's going to be bullish for some time. So this is the weekly time frame. Now let's go back to the daily so that we can get it. You get to go to the daily and see a picture of what is happening. This is exactly what is happening. Okay, it's going upward. Okay, this is it. It's an upward movement. though there is a strong momentum candle, a strong momentum bearish candle that came down, but it's still going to go upward. Now let's proceed down to the 4-hour time frame, and this is what we have here. This is the 4 hours. Look at the 4 hours exactly. You see, this is my 50 moving average already on the support and resistance line here. That is why we are having that reaction. So that reaction is going to be there for some time. So if you want to take a buy position, fine. When you see a reaction like this, especially when it's coming down and you notice a movement in the 50 moving average is this format and the 100 below, then know there's going to be multiple reactions. It's the same thing for boom and crash. It is the same thing. This indicator gives you the accuracy, what is going to happen in the next 30 minutes, 5 minutes, 10 minutes, as the case may be. Now looking at it from the 1 hour time frame, you see the reaction is still there. It is there. It's so obvious and so very much obvious. Look at it. This is my 100 moving average in this form. This is my 50 here, 35 and 26. They are all reacting, giving me this reaction. If I had taken the market from this level when I saw it, although I came in late, I just saw it now, so I just said I should do an explanation for those who do not understand, my moving averages, my explanation, the previous explanation I did, and I'm trying to make it clearer to you now. If I had seen this market earlier coming down here, I would have taken the position to buy this candle back, because I know there will be reaction here. To take this candle back, at least selling this candle from this level. It is 8598 to 8589. Buying it from 8589 back to 8594 with a good lot size is something. At least it's something. I'll make something very very meaningful. So I'm just trying to draw the picture here, so that at least you can understand why I have these moving averages on my trend and what they are doing for me. You understand? It's the same thing here. This one now, if this candle forms and come down, the reaction will still be there, because the moving averages I have in the trend, it's still in this direction. Look at it. So when the price come down, touching this moving average, touching this one, there will be a reaction. Now this 30 minutes time frame is going to sell down to this place again, because as the time frame changes, the positions of the moving average changes. Now if you watch very well, this is going to sell down to this level. This is 30 minutes time frame. When it gets here, there will be another reaction. Even if it proceeds further, this is already the support and resistance zone. There will be reaction backward. So that is how this VIX sells. It sells back and forth. So if you don't have good equity, trading VIX is very risky. You need an equity that is pronounced, so that even if there's a retracement, even if there's a push back and forth, at least you're able to make something out of. So with this now, I can even see, look at the candle, look at it. It's buying. It's going back and forth. And look at it. It's going back and forth. Though it's going to come down. It's a downward trend, but it's doing back and forth movement. Like I said, it's a downward trend. But whenever it touches my moving average, these ones now, there will be a reversal. There will be a huge reversal. You understand? So let's go down to the 15 minutes time frame and see for ourselves. Okay. It is similar thing here. Now it's going to come down. It's still going to come down. If I want to, I can take a position now. This is going to come down to my 50 moving average. If I want to take a position now, I'll take it. I will stop at 8589. Okay, let's say 8589.2 0.8. Let me use a good lot size. Okay, just taking that now. So I'm expected to sell this candle to sell to that position. So I'll pause it so that When it gets there, as soon as I hit my TP, I'll proceed with the video so that you can understand this better. Okay. Yeah, like I said it, guys, it touched my TP. It has touched my TP, and I just want to point it out that it's now at the second, my 50 moving average, and there will be another reaction. You see another reaction. You see another reaction of a buying, movement. It's going to react a bit upward. It's going to react, like you can see, it's going to react because of this moving average. It has touched my 50 moving average, and there will be a reaction just as we got this one here. There's going to be another reaction before the selling continues to this level here, where we have this reaction, where we have this moving average. So there's going to be another, as you can see, it's going to react to this moving average. It's going to react then before the trend continues. So this is all I have for you guys this morning. Don't worry, I'll still have more profitable and more useful videos, to show to you guys, to give to you guys on how to trade this VIX, trade it with ease. With this, you'll be able to make money daily. I know so many people are scared of trading boom and crash because once they are hit by spike, they don't know how to recover. But with VIX, you can do it with these indicators on my chart. Trading VIX will be much more easier for you. It will be much more easier for you. So what you do once you have this indicator in your charts, what you do, you judge the chart from the 1 minute, 5 minutes, 10 minutes, like that time frame. What you should be watching out for is the touching. Whenever the price touches the moving average at a particular time, the reaction, you just go back, do a little back test and see how the reactions, what happened, how the thing reacted when price touched each of these moving averages. When the price touched, especially on a bullish trend, when it's on a bullish trend trying to do a turn, a pullback or something, when you try to do a turn like this, changing from the bullish trend to a bearish trend, always watch out for the movement of the price on the moving average, the reactions, every single movement and every reaction. Just watch out and see how it plays. It will help you to guide you on how to win always, successful winning rates. You make good money, you make good fortune, trading this with ease. You understand? So if you are new to this channel, once again, I urge you, just subscribe to this channel. You'll get useful, profitable videos that will help you, that will make you grow fast. So I don't know, but I like being simple. I like explaining myself. I like breaking down my strategy so that you and I will understand the reason why certain things happen. Okay, I just want to show you a picture why this thing came up. See the breakout. Let me just show you a picture here. Let me use this as a tool. Now see what happened here. You see this breakout? This is simple to tell you that this trend is going to sell. But along the selling line, you see what happened there? There's a breakout somewhere. Immediately after this, immediately the trend change, we have this, you see this moving average moving downward. Now see what will happen. Even after this multiple actions here, it's still going down. So what you do, watch out for the price whenever it touches the moving average. The moving average acts as support and resistance on the price. It's either it's supporting the price or it's resisting the market from going further. It's either it's supporting it to go in that direction or it is resisting it. So watch the first reaction when it touches, watch the second reaction, then you know what to do on the third one. Okay, so see you guys in my next video. If you've not subscribed, please do so. Like my videos, share it to your friends and family that something is happening here, at least so that we can grow together. Like my $100 challenge is still very much intact. I told you it is not every day. We are not magicians. Sometimes the trend has to be very friendly with us. Sometimes it is not friendly. But on the long run, all we are pursuing is getting to a set goal, achieving success. At the end of the day, I will come out with the story, and every one of us will see. I have a VIP signal group. I have a VIP, just few persons, to go. I have a VIP signal group. If you want to join my VIP group, fine. If you are very busy, that's very busy, not having that time to look into the chat, you want account management, though I prefer managing an account with a good equity, not coming with $10, $5, and $20 account telling me to manage for you. You want to kill me? If peradventure something happen and there's a reaction in the trend, where do I start from? I'll now go back, start looking for fund to fund your account or something. I need equity with an account with a good equity, maybe $100, $200, $300 as the case may be. With that, at least you can be able to manage and grow, not having a $10, $15 account and you call me as a manager to manage for you. Guy, I will run away from you. That is the truth. You are not going to kill me before my time. So that is it. I'll drop this video for you now. I'll drop it now. Then let's have look forward for the next video. Thank you very much. Thank you. I appreciate everything you're doing. I appreciate your love, your oneness, and I hope to give you more educative video that will take you to the next level. You see the reaction, you see the pullback, you see the green candle forming. It's going to form. This same thing you're seeing now, even in boom and crash, same thing happened. Look at it. The price touched the 50 moving average, and you can see the next candle that is forming now is reacting. It's still going to come down though, but at least if you have to catch spike here, trading boom and crash, this is an easy way to catch spike. It's going to react and the price is still going to come down. So this is it. This is what I'm trying to explain to you. It will do the same when it gets to this guy. It did it when it got here. This is 26. Look at the multiple reactions back and forth, and it did it when it got to this guy. It reacted that way, and look at this tiny green. Let me maximize it a bit. Look at this green. You can see a green in between here. Now this is what is forming now. So it's still going to come down because my 7 and 2 moving average is pointing downward. It's still going to come down. Okay, so this is it for now. See you guys in my next video. Bye bye.